Hello, everyone. Welcome to the stock-specific class here for Thursday, December the 30th. Just one more day of 2021. Again, real quickly here, if you have any questions throughout the week, make sure you send those to jerry@traderspro.com. And let me bring up the direction alerts here. Let's quickly go through the market conditions. They really haven't changed much since Tuesday's market update class. We have seen a little bit of an uptick in breadth, though I talked a little bit about that on Tuesday. But momentum is moved into that extreme reversal risk area, but still, again, not on the far right side of that. It still has some room where it could run. Breadth is picking up a little bit today. It had been lagging the last couple of days, so if you're wondering why it's not showing up here, remember this update's overnight, and so today's increase in market breadth will show up when the system updates. You'll see this probably move closer to the right side of the high range here, and it's good to see that market breadth is picking up. I'm going to show you though, another way you can see. Typically, when market breadth is good, I've talked about it a few times, but I know there's new people that join, and so I'll go over that here in just a second. Sentiment is still high, but again, not to the level yet that we'd have to assume a pullback was imminent. Now, I just don't see all these levels pushing into the far right side of the extreme level through tomorrow. Just because of the fact that a lot of people are taking time off this week. The volumes this week have been down, as they are every year. Probably the worst time to trade, as far as trying. If your system is geared around trying to read what professional traders are doing, which I typically try to do. I've talked about this a number of times, that I'm trying to just get good at seeing what the big institutional traders are doing and then just try to follow along, because they're the ones that move the market. But if that's what your system is built around, and you got to assume that in a week where the majority of those institutional investors are on vacation and not doing a lot of trading, that you're not going to get a lot of help from them, and that's always the case every year. That's why typically I take the last usually I take, as far as trading's concerned, I usually a few days before Christmas I'll start trying to make sure I'm out of positions as best I can, and then I try not to do anything until after the new year, just because it's the only time of the year I can take a break. Now, obviously, I still have these classes to do, and there's many of you that are trading, and this is the time that you can trade because you're busy with work other times, and so I get that. But the point I'm trying to make is that just realize that if you're a little confused with some of the erratic movements that have taken place over the last week, stocks that look bearish one day and then suddenly they flip flop and look bullish the next day. A lot of that has to do with the fact that you don't have as much stability with the big institutional traders out there. Now, I'm not suggesting they're not doing any trading at all, but again, they tend to lighten up and it shows up in the volumes as well. But you're getting a lot of retail traders, and retail traders tend to be a little bit more impulsive, and I think that's what causes some of those swings that you're seeing. Now, another thing I can't remember if I pointed this out on Tuesday or not, but I'll bring it up here, is that you want to be real careful that first week as we get to January. There's a lot of decisions that are made at the end of the year and at the beginning of the year that don't always have anything to do with the future expectation of a stock. We see this happen on option expiration. There's buying and selling that happens on an option expiration day that has nothing to do with the expectation of the future expectation of that stock. That has everything to do with the fact that it's option expiration. Maybe they're buying shares to exercise the call options that they have, or selling shares to exercise the put options they have. When you get to the end of the year, big managers of portfolios will adjust portfolios. Again, they want to show that they own Tesla and Apple and Microsoft throughout the year. Even if they didn't, they want to make sure that the yearly reports that they send to their clients are showing those big large companies. And so their money will come out of other areas and go into these areas so they can show those on their reports. Well, again, that doesn't mean that they're expected to hold Apple or Microsoft through the next year, or that they believe the smaller cap stocks are getting out of or terrible. There's another motive there. They're wanting to impress their clients who really really don't know the difference between why you'd want to hold Microsoft at a certain time or why you'd want to speculate on a small cap stock. So again, this is what I'm pointing out, is that there's sometimes these decisions that happen, and they usually happen around quarters as well, because there are quarterly reports that get sent out. So you'll notice at the end of quarters, you'll see the end of the month of that quarter, you'll see a lot of, it could be buying or selling that's taking place. And then the new quarter starts, and you can see buying and selling take place that maybe is opposite of that. The point is that there can be some false moves that take place as you get into the new year. And as bullish as the end of the year is right now, we've been rallying since last week and rallying strong into the end of the year. It could reverse sharply. That might not, but it could reverse sharply January, the first trading day in January, which I believe would be January 3rd. But again, it may not. But there can be that wild swing that takes place, and so just be prepared for that. Things about mid-January, things start to stabilize a little bit, and then you're kind of back onto the normal trading routines. But yeah, there's a lot that can happen this time of year. Buy-sell ratios. Again, they're close. We're starting to see the buys outpace the sells a little bit, but they're not widening in a major way. I think we'll see a little bit bigger movement because a lot of those small cap stocks have moved so much today that could create a little bit more movement when the thing updates overnight. But from this standpoint, it's not showing an overbought market or a market that's too far to one side. Taking a look at sentiment here real quick is pretty elevated. We're getting pretty close to that red line there. We can go above the red line, and but this lines up with everything else. We already have a couple of indicators that are in the extreme reversal risk box. If Brett gets into that and we start to get above that red line here, you have to start to assume that we could get a pullback. And like I said, I'll point it out when I see it, and we'll talk about it. But we're not quite there yet. If we look real quickly at the indexes, we've seen the S&P kind of pause the last couple of days. There's an indecision spinning top candle right there taking place after this big run up. Kind of the same thing happened yesterday. Today we tried to rally, but we faded a little bit. I mean, all this is it's just a consolidation, it looks like, so far. I don't see anything there. There's always a potential you could get a little sharp sell-off or a little sell-off day and then still go higher. So trying to predict, having price action like this over the last few days, what's going to happen tomorrow, it always could go either way, typically, especially when the candle today is showing indecision as well. But ultimately, it looks like it still wants to move higher. We just broke out to new all-time highs. We have some of the other indexes that are are real close. In fact, let's take a look at the Dow. Now, Dow is having a little bit of a bearish reversal today, although we've come back up a little bit, so you're forming a little bit more of a spinning top candle formation. But that's in that context here, we've had this big run up, and remember the S&P started to have that indecision back on Tuesday. The Dow has just kind of kept moving higher. It traded above its all-time high today, but it doesn't, as of right now, it's not looking like it's going to close there unless we get a rally into the close. But that's this should, maybe it pulls back for a few days, but ultimately it should end up breaking out to new all-time high. Typically, you're not going to see the S&P break out and then the Dow get right up to it and then come all the way back down. Just in the context of everything, I would assume that at some point it's gonna reach that new all-time high. Same thing with the Nasdaq 100. We're right there. The last couple of days it's pulled back a little bit, but it's having a stronger day. We're up about 1/3% on the Nasdaq 100. So this should end up breaking to a new all-time high. The only one I don't think will end up breaking to a new all-time high before a bigger correction takes place is the Russell 2000. But you can see, we're up almost 1% today. And this is what I was talking about earlier. You can use the Russell 2000 as a measurement of market breadth because it is an index that's looking at 2,000 stocks instead of 30 like the Dow is looking at, or 100 like the Nasdaq 100 is looking at, or the S&P 500 looking at 500 stocks. It's looking at 2,000 stocks, and so this often gives us an idea of how the small cap stocks are doing. Even though there are large cap stocks in the Russell 2000, Microsoft is part of the Russell 2000, Apple is part of the Russell 2000. But when you get beyond those larger companies, those 100 to 200 larger companies, as you get out into the smaller, 1,000, 1,500, 2,000, those types of smaller companies, they'll have an impact on this index. So when we see it outperform like this, when you see that the Nasdaq 100, the Russell 2000 is up almost 1%, and you go back and you look at the S&P 500, which is up, barely over 0.1%. It tells you that the small caps are outperforming today, and that usually is a reflection of market breadth. It means there's good participation. Now, why is that important? Again, I talk about this all the time, so forgive me if from class to class, and I teach a lot of different classes, so I never know when I bring up different topics in different classes, but I do bring up the same topics all the time to try to teach as many people as I can these things. But the reason why it's important is because when, if there are let's say, just take 100, let's say there are 100 stocks, and you get an upward move in the market. So the index is showing an upward day. So the Dow is telling you there's an up day today or something like that, or the S&P is telling you there's an up day. But the 15 largest companies, or the 15 most significant companies, are the ones that are moving up. The rest of the stocks, the rest of those 100 stocks are flat or down. Well, and I'm not even saying the largest. I'm saying there's 15 stocks that are actually moving up, that are causing that index to move up. Well, what are your chances that you're going to be able to find one of those 15? It's a lot lower, right? I'm not saying you still can't do it. I'm not saying there aren't tools we use. We obviously, chart analysis we use. We use all the tools we can use to find the companies that should be moving up when the index is moving up. But when only 15 of those 100 are participating, your chances of getting one of those 15 is pretty small. Which means you get caught in a situation, many of you might have felt this last week, where you see how much the indexes were up. All these S&P was up big, obviously not over the last couple of days, but last week in particular, Nasdaq 100 was up big, and the stock you were in was flat or down. and you're saying, what else can I do? This is such bad luck that the indexes are up, but my stock is not up, or my 5 stocks that I'm in, or none of them are up. You think, well, one of them would be up. So it can be very frustrating, but that's what's happening is you're not getting real strong market breadth. There's not a lot of participation. Now, when you have good market breadth, it means there's a lot of participation. You might get the same move in the index, but now 85 stocks out of those 100, almost every stock in the index is also up. Now your chances of getting one of those stocks that is going to move up with the index is much greater. So when you're in that type of market environment, it almost doesn't matter what stock you pick. When you're in really strong trends and really have really strong participation, if the index is up, then you could almost pick any stock and it'll be up and it'll go up as well. Now, it could be a stock that's within a downtrend even. The stock might be in the downtrend, but because the market breadth for that day is so strong, the index is up and your stock is rallying within the downtrend that day. That's how you get that 85%, is that even the stocks that are in downtrends will rally that day. They'll rally along with it. So again, you can look back and you'll find that the majority of the time when you're having losing streaks, and I'm not talking about one losing trade here or there, because you're always going to have that no matter what the market conditions. You're going to have a stock you pick where it goes down and everything else is up, But I'm talking about having situations where you've got 5 stocks and all 5 of your stocks are down while the index has been up for the last 3 days. I can almost guarantee that those are situations where the market breadth is low and the participation is low. Now, how can you recognize this? Well, one is, again, when you start to see the Russell 2000 outperform the other indexes, that's usually a sign, and it could be outperforming the upside, outperforming the downside. If I'm trading both ways, if I'm shorting stocks, I want to have a market situation where the majority of stocks are going down, which typically happens when there's a crash. You see any sort of a crash day, go look at those heat maps out there, and they'll all be red. There's no stocks that are up that day. Everything's down, and obviously by different amounts, but it's a situation where you could short almost anything and you're going to make money. So you can have this in both directions. But I can almost guarantee that if you're in one of those situations where you're holding 5 or more stocks and a majority of them aren't participating, it's because of that lack of market breadth. Now, I usually tend to notice it because I look at a lot of charts during the day, and that's just what I like to do. I just can't get a feel of what's going on unless I look at a lot of charts, and I have a tendency to look at 500 to 600 charts a day. Now, I can do it in about 20 to 25 minutes. It doesn't take me very long because I'm not looking at the charts for more than a few seconds, but I can get a sense. I'll start going through and I'll notice that, man, the index, the Dow is up 200 points, but I'm not finding many stocks that are up. There's so many of these stocks that are down or flat or have bearish looking candles. Well, that's a warning sign to me that it might only just be a handful of those stocks that are causing the index to be up. And so that usually will tell me, it doesn't mean I can't make a trade, but that tells me I don't want to be loading up in those types of conditions. Now, I want to be loading up when, there's 85 out of 100 stocks that are moving, and my chance of getting one of those is going to be so much greater. And I may not pick the one that's up $20 a day, but I can find plenty that are up 5 or something like that, and I can make enough money with those. All right. Just wanted to throw that one in there to make the class a little bit more interesting. All right, so we covered the indexes here. I don't want to go through all the charts, although we did expect the bond market to drop, which it did yesterday. We were talking about this little consolidated move. Now, this could be an ABC pattern now. Maybe it's complete and it starts to rally back up. We'll keep an eye on that. But it before that, it was showing a higher probability of breaking to the downside, which it did. Oil still moving higher. A little bit of a bearish candle today, but just may reflect or indicate a possible little pullback in the near term. Dollar looks like it's getting ready to rally. VIX has been dropping. Now VIX is starting to get pretty low. So it's in an area where we can start to be contrarians a little bit and say, maybe the complacency is a little bit too low. But again, if we can match that up with a market that's really overbought or starts to get overbought. So if we really start rallying into next year, if next week is a full-on rally again, we're going to get stretched, and we're going to see the VIX very low. We're going to see these other areas, these other indicators in that extreme reversal risk. And don't be surprised if Tuesday or Thursday next week, if that does happen, that you start to hear me say, "Hey, we got to start being a little concerned about a little bit of a bigger pullback, a little bit of a bigger correction." Chip stocks have been down a little bit the last couple of days, but it's looking like it's breaking out and should ultimately end up breaking out higher. Dow transportation stocks, they're getting real close to breaking out to a new all-time high. Bitcoin really dropped earlier this week, and is an update today, but I don't quite trust it just yet. That if they can start rallying back up and put in a higher low right here, maybe I might turn the corner on that. But the way I'm looking at it right now is it recently had a lower low right here, lower high right there, and it might end up going to another lower low. It recently broke that uptrend. So I'm not the most bullish on Bitcoin, but that could change. I mean, it's had a big enough pullback here where it could, that might be the end of the correction. It could start moving back up. But I got to see a little bit more evidence, maybe going to a higher high right here, higher high, higher low. A little bit more evidence that it's turned the corner before I'd get more bullish on Bitcoin. All right, what stocks? I'm going to do a couple things here. We've got a lot of stocks in the watch list, and so now I don't have any room in the portfolio. If we want to look at the portfolio real quick, I'm fully in. I don't have any cash available. Almost back to 90,000. And I can go through these trades real quick, just so we can look at how they're looking. Switch these back to signals here. Let's go to my portfolio. Stock specific class. Eli Lilly still moving sideways, but looking like it's getting ready to break out again. It could dip a little bit before breaking out. So it's, you get these little sideways moves. It could dip down a little bit, but ultimately it looks like it's going to break out higher. So we're still holding on to that. LPX, same thing. No reason to get out of this one. LPI down a little bit today, but it's still waiting for it to, we did get a higher low right here. Waiting for this to kind of break out, give us a higher high and another higher low right there if it can do that. This is in the oil sector. Oil again, some of the oil stocks have lagged a little bit. The chart of oil, the USO, it may just be that they'll be catching up here pretty soon. So I still think there's good upside potential there. HBP broke out recently, dipped a little bit yesterday, but came back up. It looks pretty good today. Still looks like it wants to go higher. Getting into that extreme reversal risk, but we're not the far right side of it yet. And even some of these that are, like ACLS is right there at the far right side. That sometimes they can stay in that a little bit. They can, and I don't see anything that's indicating a bearish reversal just yet. The indexes still look like they could rally a little bit further, but like I said, if we start seeing, strong bearish reversals in extreme overbought conditions in the market next week, I'll start tightening stops in some of these stocks, and we might look at a close below the previous day or something like that as an exit strategy. KRUS consolidated a little bit the last couple of days, but looks like it's getting ready to break out to new high. DNQ, again, nice move today, getting to that far right side, but still looks like it can run a little bit. Tesla, bullish reversal candle, opened lower, but it's trading higher than where it opened. It opened down here. They had some recall news that came out, but it looks like it's shaking it off. It like I said, it opened lower, but it's trading up here now. It looks like it should continue to move higher. Ford's just been in this kind of sideways range for a while, but it seems to be, it broke back up above that breakout area right there. It broke out above it, came right back down below it. Here it's been able to hold it. It's kind of been flat the last couple of days, but it seems to be holding that area there. Hopefully it can rally off of that. NSC, this is a Norfolk Southern Railroad stock. A little bit of a bearish candle today. We're right at that breakout area though, so it's possible it maybe consolidates a little bit right here like some of those other stocks have done. Not too worried about it yet. UPS, same thing. Getting very similar chart patterns here. And that's it. So those all look good. Now, because I'm all in, I'm not looking to add anything. I can't add anything, but I will go through that watch list here in a second, and I'll show you patterns I like, and that's the purpose of this class, to give you some trade ideas, and we'll kind of go from there. One thing I did want to point out though, in these, as you go through these sectors, for instance, in computer and technology, it really showed up. There's a lot of these stocks right up here that 90 high strength ranks, and you might have noticed that I'm skipping over all these. Why am I skipping over all these? Well, take Netlist for instance, NLSC. It's been on this list a long time. It's been a high strength rank company. The problem is that it is what we call an OTC company. It's traded. It's not traded on an exchange. It's what's referred to as over the counter. Now, in the old days with broker, when you had to call your broker, they had a book of these companies that weren't on exchanges. You could still buy their stock, but they were called pink sheets. They were the pink sheets. They weren't part of the exchange. Now the problem is that you can still buy their shares, but it's not on an open exchange, so it's very difficult to buy and it's very difficult to sell when you're ready to get out. So imagine wanting to sell, and you've got a broker out there that's got to find on another network someone to buy your shares. There's not a floor trader, in other words, that's going to instantly buy your shares from you because there's enough liquidity there. So you don't want to be messing around with these. I just skip over them. Now the system it includes these stocks. The problem is that when you start to try to sift too many of these things out, that you can also sift out good companies as well in the process. But I wanted to I haven't talked about this for a little while, and so some of you that are new, you might be a little bit confused why I'm passing over some of these stocks. And sometimes I miss it. Sometimes I'll find a great pattern. I'll talk about it in class, and then after I've done talking about it, I'll realize, oh, that's an OTC one. Just skip it. Just move on. But now, usually you'll have a pretty good idea if it's an OTC stock. If it's like this is 1 cent, if it's under $5, there's a good chance it could be an over the counter. But like Netlist is over $6. I found one that was actually like a $200 stock. That's really rare to find an OTC stock that's that expensive. But here this one's 21 cents. Good chance this one's an OTC. Yeah. So just be aware of that. And to be honest with you, I bought an over-the-counter stock when I first started trading. Actually, before I really got into trading, but I had to do it through a broker. I don't even know how to do it. I've never done it in today's, everything's online, online trading now. Online trading was just becoming popular when I started trading. I started with a broker and then quickly moved into online trading, but I don't even know how you do it, through an online system. So you might have to, if you're dead set on trading one of those, you might have to contact your broker and find out how they go about doing it. I'm sure there's a way you could do it even through your broker. But anyway, I just tend to stay away from them. There's a lot of these too that can be manipulated. Just think of, if you've seen the movie Wolf of Wall Street, he manipulated a lot of these types of companies that they would call people up and have them buy them. It would inflate the price of the stock, and then they'd dump it, they'd sell it, and it would crash back down. People would lose. They'd make a lot of money and people would lose a lot of money. So typically you want to stay away from these type of companies. All right, so what do we want to get involved with? Well, let's take a look at, start with construction here. And I already have a few of these that are already in the watch list, but I liked this FIX right here, Comfort Systems, 90 strength rank. I like kind of that bowl-shaped move. I might have even gone over this one. I might have done over this on Tuesday. I don't know. Well, I'll add it to the watch list and we'll see. But just waiting for this to go back to a buy signal. But I like it when I see kind of a bowl-shaped move and you're on the right side of that bowl. There's a very high probability you're at least going to get back to the top of the bowl. Maybe it moves sideways and gives you that handle. Then when it breaks out, it will often go up about the same distance as the top of the bowl or the bottom of the bowl. So those make great trades. Again, they're not guaranteed to do that, but there's usually a pretty high probability. So let's add this to the watch list if it's not already there. Nope. Okay, let's go ahead and put in an alert. You have to email me when it goes from hold to buy. All right. Let's go under computer and technology. There's a lot of these stocks that are moving today. Like I said, a lot of these at the top are in that those peak sheet type stocks over the counter. I like this DFIN right here, 95 strength rank. Again, you've got the pullback right through here, went to a sell signal. It's moved up nicely, moved a little bit sideways right here. Got a buy signal today. So what's going on right here, the reason why this jumped out as a good, something I like to see is there's a couple concepts here that are part of the basic trend analysis. One is that stocks will tend to retrace about 50% of their moves. So when you have a move up right here and then it pulls back, it will tend to pull back about half of that move up. Now, the key word there is about. There's a range, the Fibonacci range. I have a training on this. The minimum is about a 382 retracement, or 38.2%. 50%, 61.8%, it forms a retracement zone. And again, even with that, I just go with the basic concept is that stocks will tend to retrace about 50% of their moves. So anytime you see a retracement that's about 50%, it tells you that if that trend is going to continue, that's about the area where the buyers start to come back in and push it up. Now, the key word there is if that's where the trend's going to continue. They don't always continue. Buyers don't always show up, but if they are, usually that's where they're going to start showing up. So if I look at the run up right here, it started right here, went all the way up to here, and it pulled back about 50% of that move. Now, another thing I start looking at is stocks will also tend to alternate between impulsive and corrective moves, meaning you'll have impulsive move up, be a little bit more choppy in the corrective move. This is what forms those stair steps. It looks like you're going up a set of stairs. When you have a trend reversal, you tend to go from an impulsive move up to an impulsive move down, and then you get corrective and then down. You start stair stepping down. When you reverse from a downtrend, you often get impulsive down, impulsive up. Well, I mean, so with this looks to me like an ABC pullback right here, 50% retracement of that move, and then you have the impulsive move up, and then this is corrective. So that's acting like this type of behavior right here, where it might bottom out, impulsive up, corrective. It should be working its way back up. Now, if you've been with me for a while, you know I trade these all the time, and not all of them end up going higher. I mean, it's just, you still have to manage the trade, have stops, all that kind of stuff. But you'll be amazed if you get those concepts down. You'll be amazed at how often they work. They work a majority of the time, and there are times where you'll start to get a feel like you know what's going to happen next or what should happen next, and that's where that can really start to build your confidence in reading. Because again, what we're doing is we're reading what the professional traders are doing, and right now it looks like they're starting to buy the stock, and it could start to trend back up to those previous highs and maybe even beyond. So I like that one. Let's add this one in. Now this one will give me an alert tonight, just because it's going to a buy signal today, but that it won't until it updates. It won't recognize that buy signal yet, but then it will tonight and send me the email. But that's all right. I'll go ahead and have them send me the email. I like that pattern, but I don't have any cash to put it, and I don't want to get out of any of the trades I'm in. I still like all the trades I'm in too. Sometimes if I see a stock that's in the portfolio that's lagging a little bit, or it's not looking as good as it did when I first got in, I might sell it and get into one of these newer ones that look like they're getting ready to go. But I don't see that I want to get out of, so I'm just going to sit tight on that. All right, another one under computer and technology. This TRNS, Transcat Incorporated, 95 strength rank. And again, you'll notice kind of that bowl-shaped look to this. Had a buy signal pull back a little bit right here, but it still is kind of holding. It looks like it's on the right side of that bowl. A little bit of a lot of tests at the lows right here, so a lot of support down there. So I like this one. Let's go over to industrial products. Under the hold section here, I like this Encore Wire Corp, WIRE is the ticker, 93 strength rank. But again, you'll notice a very familiar pattern there, that bowl-shaped pattern. Looks like maybe we could get a little bit of a handle right here. Now you could wait to see if it breaks out and buy the breakout on something like this, because sometimes it can move sideways for a few weeks if it really kind of consolidates right there. That's one to kind of keep an eye on. And there's one here under business services. This MEG, 93 strength rank. And this one, again, you've got the pullback right here, have a nice long uptrend right here, deeper pullback right here, but it looks like it's starting to maybe move up to the right side here. We'll wait for it to go back to a buy signal anyway, so you hit a little bit of a pullback right here. If it go back to a buy, if it could break out and go back to a buy signal, you'd have a higher low, higher high situation, be acting like an uptrend. It's a little bit of an impulsive move right here. This is a little bit corrective. And it has a little ways to go before we get to that buy signal, so you should have some pretty good confirmation if it goes back to a buy signal. Add that to the watch list. Now, I also found a couple stocks. If you're not finding a lot in the sector section, you can go into your muscle stocks tab, and there's a lot of different ones there that you can look at. And I've got some trainings on the different tabs as well. You can go into the YouTube channel and look for some of those trainings. But I like to go into the new buys, because these are, if I can find a pattern that looks like it's pulled back, these should have a new buy signal, and they could be ready to go right now. Let's go into muscle scans here, and then new buys. And this one's getting close. It does look like maybe you're getting this bowl-shaped move. I'd want to see maybe a little bit more getting up there on the right side of the bowl. But this is one that's looking pretty interesting. It looks like it could be starting to move back into an uptrend there. And that is in the oil energy sector, so that the oil looks like this is a coal stock, but a lot of the coal stocks have been doing pretty well lately. Or look, they pulled back, but they look like they could start to move back up. I'm going to skip through some of these I don't want to chase. This SUM, this was one that we already have in our watch list. That's gone to a buy signal there. This looks like a pretty good pattern here. This ODFL, this consolidation right here, and then you had just kind of a quick drop, quick move back up, and it's getting ready to break out again. You could wait for it to break out too, even though it's giving you a buy signal now. You could wait for that little bit of extra confirmation if you wanted to. This is the transportation sector, which has done pretty well. We've seen those transport stocks have done pretty well lately too. CVCO, gone back to a hold signal today, but kind of a similar V-shaped move, drop down, move back up. I'd love to see like a little bit of a consolidation where it moves sideways, because that would kind of confirm the possible uptrend, because you have impulsive up, you get corrective, you should get impulsive up after that. And then we'll do one more, because we're starting to get below the 90 strength rank. You do want to keep an eye on that. It is the order of these new buys is ranked by strength rank. So as you go down the list, you're going down in strength rank. This is an 88. That's probably about as low as I want to go. But you got a buy signal right here. Nice little pullback. Looks like it's starting to turn the corner, go up the right side of the bowl. MLI is a ticker symbol. And you do have to kind of just double check. See, make sure it's not an OTC. This is a New York Stock Exchange. So this is on the New York Stock Exchange. Or you might see Amex for the American Stock Exchange. You just don't want to see OTC. Sometimes it'll say NASDAQ for the NASDAQ Exchange as well. Okay. Those are the three main ones, by the way: New York Stock Exchange, Amex, and the NASDAQ. All right, let's go through the watch list real quick. And it's getting pretty big. I might need to go through and weed out some of these, although some of them, like Ford, were already in, so I can remove that one. There might be a couple others I'm already in too. Sometimes when I add to my portfolio, I forget to boot myself out of the watch list. I think that's it. All right, so SD, man, this hasn't really done much, but this is one of those oil stocks that if oil starts taking off, this could start moving. But I'm going to keep it in the list here. Let's go to watch list. It's stock specific class here. CDEV, same thing. I don't see a reason to boot it out just yet. NOG, another oil stock. GDYN, this one had a bad day on Tuesday. It started to break out of that range, and then bam, it got slammed right back down. The good news is it seems to be holding that support, the lower part of that range. So I'll leave it in there to see if it can break out again. But if it breaks below that range, I'm going to probably boot it out. And don't be afraid to boot out some stocks. They'll show up in the scans again when they're showing strength again. So if it's part of your process to look at the same process I'm showing you each week, look at that, try to get that 98 strength rank going from hold to buy with a nice bullish pattern, chart pattern. Usually you'll get other opportunities they'll show up again on the scans again. Now I may boot out INVE just because we missed it. I mean, this is one of those that I didn't. It broke out when I did. It broke out basically if you didn't capture that one move. If you got in on this buy signal, you got the breakout. But now it's consolidating a little bit. It could continue to move higher, but it's in that. It's already at the far right side of that extreme reversal risk. If this pulls back to a hold, it'll show up in my scan again. I can maybe jump back in it again, but I'll probably boot that one out. BW, I like this one. Had a nice bullish candle today. It opened down here. It's looking to close right in here, moving up that right side. It's electric power. It's in the computer and technology sector, but it's an electric power industry. So I don't know what they do, but I like that pattern. It's a little ways away from going back to a buy signal. Could wait for that confirmation if you wanted to, but on a big bullish candle like that, you can check the volume on it too. You might not have high volume though today. That's the thing. You're not going to get high volume confirmation on these next few days. That one looks pretty good. DAVA, this one looks pretty good. It's getting ready to break out. Went back to a buy signal here. Again, you could wait for it to actually break out to give you a little bit of that extra confirmation. This is another one that it may just it's made a big move. It's on the far right side. I may boot it out. Miss that one as well. I like this one here, SYNA. Looks like it's getting ready to break out. Again, it may consolidate a little bit through here before breaking out, and you could wait for it to break out. That one looks pretty good. SUM, yeah, this is one we already showed you. That one looks good. FTNT. Yeah, maybe I'll boot this one out too. I mean, I can come back to it'll show up again, but it would. I probably wouldn't want an entry on this unless it came back to that breakout area and went back to a hold. But I don't know it'd get all the way back to a hold. It's an extreme reversal risk here. If it consolidated a little bit, I don't want to chase that one though right now. MOV, this one looks pretty good. Gonna just wait for it to go back to a buy. I like that pullback. This looks like an ABC pullback right here. Pull back to a breakout area. There's your breakout area held. I like this one, HMHC, buy signal right now. You have this nice, so first of all, you had the pullback right through here. Let me move the chart up. So you had the breakout, the pullback to the breakout area, bullish reversal candle right there, impulsive move up, corrective, going back to a buy signal. It could move sideways a little bit longer or pull back just a little bit more, but it looks like it's working its way back up to the previous high there. Looks like a good pattern. I still like this pattern. It's a sell signal right now. Just got to wait for it to find some support, although it is dipping back below the breakout area there. I won't, unless this gets down to here, where it looks like it's going to break below there. It can hold this bullish reversal candle. Keep an eye on it. I don't see a reason to boot it out just yet. NVIDIA. Let me erase those drawings here. Still like NVIDIA. It just hasn't, here it started to take off and then had this bearish reversal candle and a lot of indecision late the last couple of days. I still am worried that maybe it has another move down. It just isn't rallying as strong with the rest of the market yet. That could happen. So I'd just wait for this to go back to a buy signal. There's a little bit of extra confirmation on this. Because if it can get back to a buy signal, and if this is the correction, it's going to break out and go higher. And so there's still a lot of upside there. I worry in the near term that it just hasn't been taking off like I would have expected it to, with the market going so much higher in the last week. It's gone up, but it hasn't gone up as much as I would have expected it to. So I'd be a little bit cautious on that one. SM, still wait for that to go back to a buy signal. AR, same thing. USO's gone to a buy signal. We talked about this last week. If you want to, or earlier in the week, that if you want to just trade the whole oil group instead of trying to find individual stocks, there's a way you can do it. Just buy USO. Now it is a little stretch. I mean, it has, hasn't had a pretty good run right there. It could be due for a little bit of a consolidation or correction, but it depends on what your time horizon is on that. And if you want to maybe wait for a little bit better entry pattern or something like that, you could do that. All right, I think that wraps it up. The rest of I might boot AZO out just because I don't think I'll be chasing this one. And then these are the new ones I added. Got a little bit of time here, so I can go ahead and boot out the ones I was going to boot out. INVE, THRY, FTNT, AZO. Believe it or not, this is managing your watch list. Sometimes can be one of the hardest. I shouldn't say hard, but you got to be careful with it because you see how big it's getting. We have to get some out of here. I mean, I can't trade all these. So when I'm going through the class, the stocks, we added all these today. If I'm adding these, I've got to look to kick some out. And and I have my reasons for wanting to hold some. Maybe I want to hold some and you don't want to. Maybe you're looking at one of these stocks, you're like, Jerry, I don't know what you're saying, but I don't like this at all. Then boot it out. But be careful not to let your watch list get so big. And the reason why they get so big is you're afraid of missing out, right? You're afraid of missing something, and that can happen. You're going to miss some things from time to time. But just remember what I talked about earlier in the class. When you're in good market breadth environments, it almost doesn't matter what you buy, you're going to make money on it. So that's almost more important than trying to find the individual stock. If you're in good market breadth environments, you're going to make money, and try to stay out of the ones that aren't real great, or at least try not to make too many trade decisions when it looks like only a handful of stocks are making a move. By the way, one way that you can, one way that is a real quick way to look at some market breadth too is, like, I've got a watch list of the Dow stocks, the Dow 30. And by the way, there might be the Dow Index has made some adjustments over the last couple of years where they've taken some stocks out, put some new ones in. This may not be the latest list, or it may actually be a little bit bigger because I added the new stocks that came in but didn't add the ones they took out. So don't freak out if there's a stock in there that isn't truly in the Dow 30. It probably means it recently was, and I'm still looking at it. But like Salesforce was recently added. Trying to think if I can, anyway. But now remember that the Dow is a price-weighted index, meaning that the stocks with the highest price are going to have the biggest impact on the index. For instance, United Healthcare. It's a $500 stock. It is the highest priced stock in the Dow Index. You look at Verizon. I don't know if Verizon's still in it. Maybe Verizon's not in there anymore. I don't know. But let's look at Verizon as an example. It's a $52 stock. It's a cheaper stock within the index. Let's say that United Healthcare had a great earnings report and it gapped up. It moved up really big that day. Because it's such a large priced index, and it could be that the whole sector moves because so all the healthcare stocks move. So maybe Pfizer rallies and, Merck or whatever, Johnson & Johnson. But what could happen is the Dow could show that it's up 300 points. But all the rest of the Dow stocks might be flat or down, especially, some of the cheaper price stocks that aren't going to have as big a weighting in the index. So now, how could you notice that? Well, if I go look at this list, I can see how all the chart patterns are looking. And if I see that, hey, the Dow's up 300 points, but I can't find a bullish looking pattern in the whole Dow 30, but I see United Healthcare is up real big today, that tells me that that's the reason why the Dow's up 300 points. It's not because of the rest of the stocks in the index. It's because of one stock or a couple of stocks. And so that would tell me don't look too much into this move today. Don't think this is bullish for everything else. But there's a watch list that you could go through. I use this Dow watch list. If I'm trying to find a trade on a larger company and I only have like 15 minutes to make a decision or something, I'll go right to this Dow list. And you can almost always find a bullish or bearish chart pattern in the Dow 30. And I do this a lot with option trades as well. And so it's a list you could create. You can create it there in your watch list. There's only 30 stocks. If you don't want to know exactly what 30 stocks there are in the Dow 30, just Google Dow 30 stocks and it'll show you. There'll be a website that it'll show you. All right. I think that's it. Well, let's wrap things up. Hope everyone has a happy and safe New Year celebration. We'll see you on Tuesday for the market update, and let's have a very successful and prosperous 2022 coming up. Thanks, everyone. Bye now.